I mean, we definitely came into this year with the view that we're going to see some policy uncertainty and the market dynamics are going to be reacting to that. And that certainly has been the case. Even from an intraday perspective, we're seeing some pretty dramatic moves in the market. And it comes back to our general view that, tariff policy is going to be a negotiation tactic for this administration. And the reality is they're going to try to extract as much as they can from this negotiation. And that may include putting the tariffs on and then taking them back off and putting delays on, et cetera. Ultimately, I do think we will get some level of tariffs applied at higher levels than what we had throughout the prior last 4 years. But at the same time, we do fully expect that there will be some consensus agreements on this to be able to not get the worst case scenario when it comes to some of the numbers that have been talked about from a tariff policy perspective.
All right, so the thing is, though, while he plays poker, literally, right, with tariffs, right, the high-frequency data, et cetera, are not liking it. The market, obviously, not liking it. And we could bring back a chart we had on just a few seconds ago. A couple of things to note. I mean, one, it's pretty clear that the bounce back post-pandemic, that's peaked. We're coming off. Two, it's also pretty clear that the whole Trump trade, that's evaporated. And three, by the way, the Mag 7 is in correction. And Europe and China are looking a heck of a lot better right now, market-wise. What do you think?
There is no doubt that the market despises uncertainty, and that's effectively what we're seeing, both from a policy perspective, but also when it comes to some of the short-term data that we're starting to see. It's creating more uncertainty in the United States around a potential growth slowdown or growth scare, as we're referring to it. And there's also some sensitivities around what will the Fed dynamics react to. Will they be more focused on growth, or will they be more focused on the potential for higher or stickier inflation? And so there is quite a bit of uncertainty in the markets right now, which is leading to companies pulling back a bit from decision making, whether it's on the hiring front or on the project front, which is certainly concerning the market when it comes to the potential growth in earnings within the United States, which on the counter side is actually benefiting some companies outside the U.S. As we start to see potential for more fiscal austerity in the U.S., we're seeing improvements in growth spending and dollar spending when it comes to some of the European countries. And we are seeing some evidence that lending is starting to pick up a bit. PMI data is starting to pick up a bit in Europe. And so there's been this trade-off where you had a really underweight asset class in Europe. People are starting to buy back into it, having been underweight for many, many years to that asset class.